Okay, this is the review of the Deng trade. Now, as you can see, we are currently at about 11:30 a.m. Eastern Standard Time. We covered at the reversal point. It usually doesn't happen that great. I'm going to be the first one to tell you I'm a real trader. I've made plenty of mistakes, and they have come back to bite me. But I look at my patterns, and I stay consistent, and I become profitable because of it. You got to have thick skin. But I want to show you why this trade is so profitable, and hopefully a 5-minute video. I don't go on too long. But if you look at the market open, Deng gap down. I was looking at the pre-market losers. I read the news. They met in line with their earnings, but they said some disappointed forecast. Besides that, that's really all you need to know as a day trader. You really don't need to know too much, and that's the great thing about it. So we're going to go ahead and zoom in here to about 1 hour or a half of trading. I want to go ahead and show you why this was so great. So the market opened. It tanked right here. It looks like you want to go short, but my pattern wasn't even formed yet, and I talked about waiting for my pattern. And I talked about the 983 level. If you looked at this, because this is the previous low of the day on May 7th and May 8th. So that's in play for today. So it formed actually a nice spinning top at that pivot point direction. So it kind of made me think that maybe this thing might turn around and it might not be as short. But then I looked at the 20-day and it formed a doji, and then it started to go ahead and lose its momentum upward. And the price action on level 2 was saying it all. The ask was stacked and the bid wasn't. All right, so I knew we had another downturn to low of day. So I was thinking, all right, well, I'll go ahead and get ready to cover at low of day just in case we get a double bottom, which you guys need to know. If you have a pattern, you need to know the weakness to that pattern, because it doesn't happen all the time. But if you know the weaknesses to that pattern, the exceptions to that pattern, you're going to be able to beat the market more so than not. You will. It's that simple. And you don't need to make day trading any more complicated than that. So I was getting ready to cover here, but I noticed that we also had a nice stacked ask at resistance. So the stock continues down, and we're watching the price action all the way on level 2, which shows you bid in your ask, and that's all it is from there, all right? And I try to use a model that makes it real simple for me. It's kind of like baseball. I know this sounds retarded, but you know, your coach tells you, you want to hit your singles, you want to be consistent, and get those consistent base hits over and over again and get a good batting average. Does that make sense? You want to have a high batting average, and that's the same thing for the market. You want to have a good batting average that makes you consistent. You want to bat over 500 in the market. You don't want to be batting below that, because if you're not going to be profitable. All right, so you want to bat over 500. Once you start batting over 500, that's when you start making small wins, but every now and then you get that win that you could go ahead and, write home about, man. You feel great, and that's what you're really working for. You want to get those singles, have a high batting average going in, and make sure you keep that average. If you only walk away 40 bucks, that's a win. Even if it keeps going down another 2 or 3%, you're winning and you got a good batting average, and you want that on your side going into the market. You don't want to be up in a stock and then all of a sudden, you hit a single and a double, and then you get caught out, that pop fly or whatever, and then you get sit right back into the dugout. You want to stay on that playing field, if that makes sense. That's the kind of logic I like to use. But hopefully that worked. I know it's crazy. But so everything worked out great. We got our single hit, and I just monitored the bid and the ask, and I monitored the 6-day moving average, and the volume kept coming in, and support was actually quite low, which I didn't think was realistic. Support's right around the 870 level. All right. All right, which support's right around the 870 level. As you can see, it also broke through this support. But once I noticed that, I looked at 870 and I was like, that's not that realistic. You already got a dramatic price drop from 11 bucks. We're going to go ahead and try to cover at 9. That was the goal. But then I realized, you always don't get those nice, round, solid numbers. You just watch your price action. That's all you got to do. You got to be flexible in the market, because the market has no feelings. So with that, we watched our price action. We covered half our position off this doji, because that signifies a reversal point. Not all the time, but I thought it might reverse and go ahead to the 20, and it could have broken out of that. And then I wouldn't be batting that single anymore. I'd be negative, and I'd be back in the dugout. As you can see, I protected my losses, and I kept batting over 500. And the stock continued to go down, and I'm happy I covered my position, because that shows I'm not getting emotional into the trade, and I'm sticking to the basics. All right, I would have loved to walk away with this trade of 2,500, but we still walked away with about $1,700 in profits. So then we covered right actually at this candle. As you can see, it formed a doji at the bottom, and I covered on the second doji, covered on the first doji, the second doji. All right, and then it started to show a reversal sign, and it started to get bullish. And right now we're at $9.75, which is about 10 cents away. Well, we're at $9.61 right now. Then I covered off that doji. And now, as you can see, the stock is currently trading at $9.62. Went up to $9.80. It had a spike jump, but those are nothing, man, in the market. In 1 minute, that happens. In 2 seconds, it comes right back down. That would have been a heart attack if you were short. But we got out, and it was a perfect trade. And it worked out great. That's because I use the rules and the methods that I go by. Sometimes I might walk away 40, 60 bucks. Sometimes I lose 80 or 200, but I bat over 500 consistently. And if you could keep yourself batting over 500, your profits are going to go ahead and continue to rise, and your wealth is going to increase, and you're going to get those grand slams like I did today. All right. So that's staying an overview, and I hope it made sense. Not all trades go this good, but this was textbook, guys. All right, so I'm going to go ahead and end this session here. Hopefully you learned something. I know I learned a lot from today.